Richard, thanks for being here with us.
Thank you for having me.
Let's dive straight into it. How about we hear a little bit about yourself and a little bit about what Rootstock was built for?
Yeah, absolutely. So my name is Richard Green. I'm the VP of Rootstock Institutional. Rootstock Institutional is a team within Rootstock Labs. Rootstock Labs are the core contributors to the Rootstock blockchain. Rootstock blockchain is a Bitcoin sidechain that is EVM compatible.
Yeah, so something interesting about Rootstock, which is not like a lot of the other Bitcoin sidechains, Bitcoin L2s, which we'll get into later, is that Rootstock, Ethereum uses ETH as the network token. Solana uses Sol as the network token, but Rootstock uses BTC or RBTC as the network token. Can you give some more color in that?
Yeah, absolutely. And this maybe goes a little bit back to the genesis story of Rootstock Labs and Rootstock. But when Rootstock was founded, our founders based over in Latin America, in Argentina, they saw the problems that hyperinflation were causing within the Argentinian peso and things like that. And they were working on the Ethereum chain at the time, and believed that Bitcoin was the true underlying asset that could solve a lot of these issues. But one of the problems with that is that there is no EVM compatibility. So that's how Rootstock was created, using Bitcoin as that underlying asset, which is the true store of value, the best asset to be able to do those things in terms of security, auditability, and those kinds of things as well. So it was really focused on keeping that as the core, and the mechanisms of Rootstock, the chain, whether you're looking at the PowPeg, which is kind of called our bridge, where you are one-to-one pegging Bitcoin into the ecosystem, into our version of Bitcoin, which is RBTC.
Yeah, and another interesting point. So, this kind of falls into the ethos of Bitcoin OGs back in the day. Bitcoin is the token, and Rootstock is trying to help embed that. But there is the RIF token. And I know there's some, mystery around that. Sometimes there's some confusion. Can you help add some color there as well?
Yeah. So there is another token associated with the ecosystem, which is RIF. And if you're looking at a network and building out a blockchain, there are things that you need an underlying token to be doing, but there's also things that maybe that underlying token shouldn't be doing. So with Bitcoin as the example, everyone wants to hold Bitcoin, and they don't really want to give that Bitcoin up. But you might also want to use that token for governance and those kinds of things. So with the RIF token, it's a utility token that we then look to deploy into our the DAO, which is Rootstock Collective. And it's just something where we're constantly focusing on adding utility to that, but allowing Bitcoin to remain Bitcoin within the Rootstock network.
Okay, nice. Before we get into the meat of the conversation, which is the yield, I wanted to ask a little bit more about the wider landscape of these Bitcoin scalable solutions. There's L2s, side chains, there's different types of bridges. Maybe we can put some color onto that landscape. How is Rootstock different? How is the custody different? How is there any false advertising with these other L2s, not to call any names?
So I think Layer 2 is a massive catch-all term, and that's something that's come really into prominence in the past 2 or 3 years. And then sidechain is another term that you hear a lot. And there are very clear definitions given by certain sources, such as Bitcoin Layers. There's a website that gives that. But the way that I usually think about it is, if you imagine a highway, and there is the Layer 1 highway, that is the main highway. A Layer 2 is an express lane on that highway. So it uses the same highway, it uses the same tolls and everything like that, but it has been built for a certain purpose to sit on that. A sidechain is a separate chain altogether. It uses its own consensus, but it has a bridge connecting to it. So to the Layer 1. So all of the cars, all of the transactions that are heading across the mainnet Layer 1 bridge over into a sidechain, and that's what Rootstock is. So it has its own consensus mechanism, but it has all of the security of the Layer 1, and that is the key thing for us. So Rootstock is secured by about 83–85% of the hash power of the Bitcoin layer 1. And that's where we see the value being, that you can use your Bitcoin natively on Rootstock with all of the opportunities that Rootstock affords you, with being the DeFi layer of Bitcoin, but then also being able to benefit from all of the things that were built into the Bitcoin layer 1.
Yeah, I think that's a good point to mention, that 83% roughly of the hash power that goes into securing Bitcoin is used for Rootstock. So it's number 2 on the list up there. Let's talk about the yield. I mean, Bitcoin yield is not a new thing. I remember last cycle, there were a lot of different companies, centralized companies, I should add, offering yield to customers. And I'm not going to call any names, but there was a lot of mishappenings, a lot of over-leverage, a lot of over-promise, under-delivering, poor risk management. And despite all of this, there was that insatiable demand for Bitcoin holders to get yield on their Bitcoin. It did not turn out well for those centralized custodians. How is it different now? And how has that led Rootstock to launch their new institutional offering?
Yeah, so firstly, the Rootstock institutional offering, as I said, is this team within Rootstock Labs. And what our role and goal is to educate professional investors and enterprises on the Rootstock blockchain and what our partners are doing and what their integrations look like, and guide them through those kinds of things. And I think what's changed predominantly is that in the past year, when people were looking for yield, it was who were the people entering into the market and what stage of adoption were they at. At that stage, you were probably seeing people who were already either super well versed in holding Bitcoin, so your hedge funds, your people who are looking at it more for a speculative asset class in terms of what they were going to be doing for yield, or they were sadly retail, looking to take a punt in certain spaces. And I think that the space that we've now migrated to is that the infrastructure of yield on Bitcoin has completely changed. You are now seeing that in the past, I think about 6 months ago, I was speaking on another panel, and the conversation is always Bitcoin as digital gold, right? And that's what it was. You hold it, you set and forget in a way, and you're just looking for that price appreciation. There was a huge market of professional investors, institutions, treasuries wanting to come into the market, but the infrastructure wasn't there. And now there is. And what does that infrastructure look like? Well, it's custodians. It's things like IFRS, GAAP accounting standards, kind of meeting the matches there. And the key thing is that the yield sources and the way that yield is being brought on chain is much more transparent. It's much more sustainable. It's organic. And I think that means that whether it be a DATCO or whether it be an asset manager, they go, I'm very used to holding Bitcoin now. I've explored all those different things. And I mean, I'm looking at the chairs in front of me, right? And like Copper, I now have partners and institutions like Copper who can provide me with a custodial service that is exactly as I would expect from the world of TradFi that has been around for hundreds of years.
One trade-off with some of these custodians, even though asset managers and these other entities are getting more comfortable holding Bitcoin or having somebody else hold it for them on their behalf, there still comes a fee with these custodians, whereas maybe doing it more natively on chain, it kind of, let's just say, flips the script. Instead of having a custodian charge you, 10, 20, 50 basis points, you can actually start to earn yield on your BTC. But there's still some issues with that, like you're wrapping the BTC, there's RBTC, there's WBTC, like there's some kind of liquidity fragmentation around that. Like, do you see a solution for that? Do you see that changing in the future?
Yeah, absolutely. And that is where kind of Rootstock Institutional came about. It was something where we already have a number of institutions who were using the Rootstock blockchain for lending and borrowing purposes or for yield solutions, and they came to us and they asked us about those kinds of issues. They said, okay, we are sitting with a custodian and we are actually losing value in our Bitcoin, because we are getting a 10 to 50 basis point charge on top of it. Now look, some custodians I think are seeing that, and they are offering free services and offering add-on services to what that revenue looks like. But again, it very much comes down to who is the person or the institution holding the Bitcoin and what is their goal. If you are a TradFi treasury, you are wanting just to maintain and sustain, and you're wanting to think about, okay, I don't want to just be losing 1% and 2% over the year. If you are a hedge fund, you're obviously looking to do a lot more than that, and if you're a DATCO, you're somewhere in the middle. And then on the other sides of the kinds of wrapped Bitcoin bridges, that's just something that a lot of people still aren't aware of what it means. And so that, again, is why Rootstock Institutional is around, because it is to educate the people on what is the difference between WBTC and RBTC. So WBTC is the most widely used wrapped version of Bitcoin, and to give you kind of a comparison, that is custodied off-chain with a single custodian. RBTC, custodied on-chain. And what's the difference, and why is one important and one not important? And listening to a panel yesterday, which was the Digital Asset Hedge Fund panel, I think one of the comments around that was, well, when we're going in to look at an investment, or when we're going to look at a yield source, what's the first thing that we check? And as opposed to maybe TradFi, what they're looking at is the protocol risk, the infrastructure risk, and where do you start with that? And so the conversations that we have range from, I am a digital asset hedge fund, I understand wrapped Bitcoin, I understand bridging risk, I understand protocol risk, I'm looking for secure, transparent yield, to a TradFi asset manager or a treasury company who has Bitcoin on their balance sheet, and they're now thinking, I'm coming into this world, but I have no real idea the difference between the two.
Yeah, no, that's a great point. And you call these different entities, these corporate treasuries, the asset managers. Like right now, I think there's about 1 million Bitcoin on these corporate treasury balances, just idle, not earning any yield. But when we say yield, we're talking very abstractly here. Like, where is this yield coming from? And that's a very important question to ask in crypto. Where is this yield coming from? And can you elaborate a little bit more on the demand and the supply side for this yield from the different entities?
Yeah, absolutely. I'm going to one up your number of 1 million. I think 2.5 million Bitcoin sits in ETFs, treasuries, and custodians. 99% of that is doing nothing. And when I say doing nothing, it's just sitting there and appreciating or depreciating. And I think the source of yield, going back to that first question, many years ago, was looking at points and rewards and trying to really incentivize a yield market. And that demand has fallen away, especially in those ETF custodian treasury plays. They're not really interested in that. What they're interested in is, really, there's the two sides to it. There is BTC-denominated yield, and that is through tokenized funds. A good example of that, the work that Midas are doing with the likes of MEV Capital, RE7, and what they're bringing on-chain. And the goal of that is to keep Bitcoin on-chain, move into an on-chain product, and be paid Bitcoin back. That's the ideal solution. There aren't a huge amount of those, because the difficulty that you have is that a lot of it has to sit somewhere off-chain. So whether that be Bitcoin, I can't deposit Bitcoin into a BlackRock money market fund, and they'll be accepting the Bitcoin. No, it has to be off-ramped into stable, and then maybe they'll accept stable, or they'll have to accept fiat, right? But that's the holy grail. That's where we want to be, and that's what I think the source of yield that people are really looking for and what is really, really interesting. On the other side, which is more on the DeFi side that we know, is that lending and borrowing market. So people are coming with a large amount of supply of Bitcoin, and they're wanting to find the other side to that, which is the borrow side. That borrow side on Bitcoin is a bit more difficult, because what you've got, if you look at Aave as an example, I think the borrow rate on Aave and Bitcoin is about 1%. There's not a huge demand to borrow Bitcoin. Two main use cases are probably ETF redemptions. So these ETF providers who have the redemptions coming through, they may look to borrow Bitcoin to provide that. And then obviously those who are trading on leverage. And so within Rootstock, within Rootstock Institutional, what we're really wanting to do is work with partners and within specific use cases. And what we have as an example of a specific use case is a group of miners. We are a proof of work chain, 83% hash rate. Those miners have a large amount of Bitcoin, but they are dollar poor. So they're coming to us and saying, how can I use my Bitcoin as collateral to then be able to get stables to pay for my service centers, to pay for my overheads and things like that. And that's kind of where we see Rootstock going into the future, to be able to provide those use cases with specific products.
I mean, that's amazing. 7 years ago, I had to sell some of my BTC to pay for my master's degree, and ended up being a very expensive master's degree. So I wish I had that opportunity back then. But I was looking at these stats just this morning. Rootstock's TVL at all-time high, active addresses near all-time high. We mentioned the merge mining close to all-time highs. Like, why are we seeing this success in 2025 with Rootstock? What is the Rootstock Institutional launched 8 months ago? They have the Vaults products. Like, is that the reason why, or are there other reasons as well?
A mixture of. I think we're definitely helping bridge that gap between TradFi and DeFi, or BTCFi and DeFi. We've increased the number of integrations on the platform. We're at about 170, and what those integrations are specifically help this set. And as you mentioned there on the Vault side, what we see as happening with Rootstock Labs is contributing a set of vaults to certain use cases, and where that then growth is coming from is us working with partners on specific things like that. So it's a bit more of a hand-holding exercise. And what do we see that looking like? Well, we see it looking like something where if I am an institution, or if I have a need for something, we can come to Rootstock. Rootstock will look to help build some form of a vault structure within that space. And why are we wanting to do that? Well, we're wanting to do that because that takes away a lot of the complications of getting Bitcoin yield. If you're not coming into a structure like that, it's quite difficult to do. You have to go through maybe a different AML KYC provider. You have to go through a different liquidity provider and things like that, when that can provide all of those different things. You see that very much with the likes of, like I say, Midas, Centrifuge, Securitize, all of those different places. Plume as a network, what they're doing as well. And I think that what is our role? Our role is to guide people and build what we think are the right products, in making sure that we, again, deliver the most secure, transparent, organic, auditable yield.
Okay, we're coming up on time, so I'll ask this last question. Where do you see the broader Bitcoin yield space coming up in the next 3 to 5 years? How do we see that playing out?
Yeah, I think that the infrastructure will carry on being built incredibly strongly and get to the stage where it is institutional grade, investment grade things that you'd associate with TradFi space. I think that the on and off ramping into Bitcoin and into wrap Bitcoin will become just super, super easy. The yield sources will become very understandable and very clear and become very varied, whether that be RWA based. I would love it if at the end of this period of time we can say, we can deploy Bitcoin directly into a BlackRock ETF or something like that. I think there's a lot of work to be done there, but that's where we want to end up. And I think that bringing it to what does Rootstock Labs see itself being in the future, well, we've always been building for the everyday use cases, everyday DeFi. It was built out of Latin America for people to use Bitcoin as that store of value, but in payments and those kinds of things. And bringing in all of that capital as an institutional layer will then allow for the retail users to be able to go and get, like you mentioned earlier, use your Bitcoin as collateral to pay for a student loan, use your Bitcoin as collateral to be able to pay for or get a loan and a mortgage and things like that. And so that's where part of Rootstock Lab is focused, but in this side, we really want to make sure that we are working towards building the highest grade infrastructure and product suite there.
Brilliant. Thank you very much. Everybody, Richard Green.